So stocks, especially in the United States, have been under pressure. Our guest says that sell-off south of the border is a thing that investors should look at carefully and recognize that it's not about doubts that the tech sector will continue growing fast, but about the fundamental or the risk that globalized trade is going to unravel, and that there's a fundamental shift as well in the way America is governed. We're joined now by Bill Blain, founder of Windshift Capital. Bill, you grew up in Scotland, which of course makes you an honorary Canadian. This is a Scottish colony, this country, but I see you are wearing a Canadian T-shirt. Why is that? Well, what's the message you want to send here?
I think the thing is Slava Canada, as you would say. Just wanted to point out that here in Europe, we all stand with Canada. We don't know whether to be bemused or what. I was in Whistler earlier this year, and I was quite, I was taken by just how passionate Canadians were getting. It was a hilarious incident in the ski slope. There was an American fellow in a one-piece Stars and Stripe onesie, which I thought was remarkably ill-informed and unself-aware of the situation. And I watched someone flick his skis off with a broom as he was sitting in a chairlift, and the whole queue cheered. I mean, clearly things have changed.
Okay. We probably should strike a more serious note, though, here. You do warn that we're seeing a shift to autocracy in the United States?
Yeah, I mean, people have been asking, when do we buy the dip in this market correction in the US? And I've really got three things that I would bring up in relation to that. First of all, this is not a sell-off that has been created by some bank suddenly experiencing higher than expected poor consumer numbers or a tech company missing its sales. This is a fundamental change in the way that the economy works, in that the government is intervening with tariffs, which are bound to have inflationary and effects on the way that businesses plan their spending. That's the first big change. The second big change is this is not just about trying to redefine a trade alignment with some other nation. This is about America deliberately picking fights with all its previous alliances and neighbors, Canada and Mexico, and of course Europe as well, which are going to fundamentally change the way that global supply chains work. And the third factor is we've been very used to investing in the idea and the concept of American exceptionalism. And I think that is coming under enormous pressure around the globe, just because what we see in terms of the way that Trump has been challenging the structures of the US economy in terms of its assaults on the judiciary and the approach he's taking. Now, I'm not trying to turn around and say that Trump is necessarily all bad. There are things that are going to happen to the US economy that I'm sure will be positive. But if you take a look at the cumulative effects just now, they are putting off investors.
Now, when you say American exceptionalism, I always think that means that America says it's not subject, in the past has said it's not subject to rules that apply to all nations, for example, ignoring the World Court. But what did you mean by exceptionalism?
Well, I've always taken American exceptionalism to be an entrepreneurial flair that has enabled them to take ideas, inventions, and successfully innovate them onto the global economy. I mean, let's not forget that Elon Musk is not an inventor. He's an entrepreneurial innovator. He's managed to create a whole market in electric vehicles. But if you then sit back and watch where he is just now, you've got to turn around and say, okay, big tick for creating the EV sector. But now that's under enormous competition. Tesla's no longer at the forefront of that. Other companies are coming in with better self-driving systems, better batteries, and they are out-competing them. And I think that's something that we're waking up to around the globe, that maybe it isn't just US companies that can succeed in the global economy. There are all kinds of companies in Europe and in Canada and elsewhere that I think are going to take the forefront.
Yeah, I should have said that America, they haven't ignored the International Criminal Court, but they certainly haven't signed on to the International Criminal Court, but they certainly haven't signed on to its jurisdiction. Bill, for the next 10 years, impossible question to ask, but Edinburgh, of course, a renowned money management centre. Also, of course, the scene of train spotting, but we won't talk about that. Where would you tend to put money, long-term patient capital for the next 10 years? Very difficult question to answer, I know.
Yeah, but a great question to ask. First of all, I've got to say, I've just come back from a couple of days. I lecture at Heriot-Watt University's Edinburgh Business School. I lecture to the postgrad course. It's my old university, and they saw fit to make me a professor a few years ago. And I definitely pick up a changing sentiment amongst the money men in Edinburgh, which is actually the UK's second biggest financial centre and probably still one of the biggest financial centres in Europe. Mm-hmm. And there is definitely a shift in the way that they are thinking. There's always been a more open approach to looking elsewhere than conventional markets in the Scottish market. And, you know, what we're seeing in China is very interesting. The fact that Z is, Emperor Z, as I like to call him, is now fully behind the markets makes that investable again. Now, that isn't to say that China is not without a whole set of its own questions to answer. But I'm also seeing interest developing in what I'm calling the middle C economy. And that's to do with the project I'm involved in financing at the moment, which is to build a petrochemicals factory in Egypt. Now, we will be exporting to Spain, to France, and primarily to Turkey. So that's a Mediterranean, we call it the middle C economy. And that economy is going to be fed by demand from Europe, but also supply chains around what's getting called the old Silk Roads or the Belt and Road, that will be links to Southeast Asia, which is not only the Chinese economy, but also the Indian and the Southeast Asian economies like Vietnam, Cambodia, which are definitely growing very fast, but also incorporating developed economies like Korea and Japan. Now, we've heard so much about the pivot towards the Pacific.
Finish your thought. Sorry, Bill. Finish your thought there, sorry.
Will be about a pivot towards a middle C economy.
A middle C economy. I'm sorry, because we're so tight. What does middle C stand for there?
Well, basically, the middle C is the Mediterranean. And that's where you'll see the Middle East, China, Southeast Asia, and Europe all combining to become the new nexus of global economic activity. That's my 10-year guess.
Thank you so much, Bill. I hope you can come back soon. And thanks for your
Anytime.